Yo, yo, yo. We had 5 viewers waiting. Where you guys at? Let me just send the link to some people. Yo, yo, yo. Hey, you made it. Nice. Welcome, welcome. Yeah, stream breakdown starting at about 25 seconds here, guys. Sorry, 35 seconds. I'm gonna give myself 10 more seconds as a break. Just came back from the gym. Just getting some liquidity. Fantastic. How's everyone doing? Cool. I know Don's ill, so hopefully he's alright for streams tomorrow, right? Obviously, that's what you guys are focused on, but hopefully he's okay as just as a whole. Alright, let's get into it. How many people do we have here? We have enough to get started. If anybody misses it, they can just break it down in their own time and then watch this as a replay. Cool, last day of the month, right, guys? So we know that today, right, is the next trading day is Friday, so that is the last day of the month because Monday is the 2nd of October. So therefore, what are we looking for? We're looking for where this monthly candle is going to close, right, and where the bottom wick is at, right? So looking at where price is right now, right, we don't really know where it's going to close exactly, but it's going to close within this range that we highlighted, right? So we had a rejection around here. We broke below these sorts of levels, right? And now we're in a range between here, I would say, and approximately here, maybe even further down to around these sorts of areas, or even here, right? So that's your overall range, I would say, is around these sorts of areas. I mean, this could be a range as well, right? You have this and you have this on the monthly. So it's very likely that price is going to come down and fill this range in the next month, right? Every time price closed below this level here, right, closed below, drove and filled the range, closed respecting here, respecting this resistance, filled the range, right? Even this was a wick, so on the weekly it filled the range, right? These just filled the range, these came down, closed below, filled the range. So every time that happens, it just fills the range. So I would be expecting the same for the next month's candle. Top wick potentially to tap these sorts of areas and then start driving down, right? So overall, I would say next month is going to be bearish until unless we get like some insane rejections at certain levels due to potential news that's happening tomorrow. But if that doesn't happen, it's very likely that price is just going to start driving down. So let's jump down to the weekly. Weekly, we're still very bearish, right? It's unlikely we're to come back and create that top wick for the weekly. As we mentioned multiple times before, this could have been the top wick for the weekly. The previous top wick could have been enough liquidity for this weekly to have no top wick to drive straight down. And looking left, where is our kind of support, our next kind of level of support for gold, and where are those levels that it taps, right? So every time you kind of fill, you break back into the range, what are we looking at? We're looking at potentially, you know, these sorts of areas, right? We're grabbing liquidity, pushing down, you know, pushing down around these areas, respecting here. You've pushed down here, you've pushed down here, right? So what does this mean, right? So let's analyze these four first. These four pushed cleanly down to here. This pushed down to this level here. All right. This one pushed down to these levels here. This one pushed to around here. This one pushed to around here, right? So I would say on average you push to at least to about 1808, right? and potentially even lower 1803 down to around, I would say, yeah, around 1786 sorts of levels, right? So you're pushing down, and if you are going to fill the overall range as price comes and creates this top wick to come down, which it potentially did for last week already, then it's likely you're going to come down to fill this range. The monthly range, it's not as clear as the weekly range because you can see these smaller details, right? But in general, the monthly range came down to 1826. If we create another level down at about these areas, right? So we're looking at this, we're looking at these wicks around here. I'll move this slightly up around here. What does this look like on the monthly, right? Monthly is like, you can see these are the monthly bottom wicks around these areas as well. So it's likely it's going to tap this area, and you have some level of support and resistance around here as well. So if that's what we're looking for in terms of the weekly, yeah, General Aladin, welcome. First time on the streams, brother. So yeah, if that's what we're looking for, right? We need to expect top wicks at certain areas, right? Obviously, you have other ranges within the kind of 1905 to 1785 sorts of areas, and if we identify that, you could say that we have potentially something around these areas, or maybe slightly higher up at around here. We'll have to go down to the daily to look at it in more detail, but in general, I'm going to get rid of this. Mainly because, right, I'm going to start looking at what happened here. So price closed below here, but it didn't fill the whole range, right? So what happened, right? So when price came down, it didn't have enough liquidity to drive, right? No liquidity around these sorts of areas. So grab liquidity again a second time to drive down. What's happening in these areas, right? This is just rejection, and that's fine. These areas, it's pushing from here, so it has potential. It had liquidity from around these areas, so it pushed from these sorts of areas around here. Same thing happened here, right? Pushed from these areas, pushed down to here, didn't have enough liquidity, so this one went back up to here, this one went back up to these levels, right? This was a kind of fake out to come back in, but you grab liquidity towards around 1961 sorts of areas, right? 1950 something, 1960 sorts of areas. So has that happened on our current price yet? Right? It hasn't, right? You've pushed down from these areas. Sure, you're kind of ranged pretty hard, so you might not come back up to create that top wick, but if it does, and we do get, potential entries around here, we could be looking at potential swing trades, and I think Don closed out his swing trade today, but we could be looking for entries around these sorts of areas to swing down based on the weekly, and that would happen over the next couple of weeks. And that's just understanding the fact that, like, if price drives up to here and it starts, continue pushing up, it will come back to break even before going up, right? Because that's just market structure. And look at this, right? It goes up, it goes down, but it creates that structure before coming down. So, in terms of the weekly, right? If the weekly closes here, I would say that in general it would be overall respecting what happened here last time, right? So around these sorts of areas, as it's respecting this, I'm looking for a mirror to grab some liquidity around these sorts of areas. And what does this show in terms of current price action, right? It would show that this weekly would get a top wick. We potentially, right, let's mark this up as this sort of area for our weekly top wick. Let's go to the monthly, right? If we come up to here, we could be expecting these top wicks around here, right? So these top wicks would break the previous monthly high. We could get another tap of around even higher for this monthly high, and then start driving down. So if that happens, fantastic, right? We could be looking for those sells to come down based on the general bearish trend that we're in. So let's drop down to the daily. Daily, we close bearish again, right? We've had some pretty strong bearish pushes for the last couple of days, and this week, and I think today is either going to continue pushing down, but depends on where it's at in the range. I would say there's kind of like there's a support around there. I would say that's okay. It's an alright support. Just looking left to see if there's anything that's interesting that could be potentially missing, but it looks okay. I would say, yeah, I'm happy with this being our support generally. Yeah, I'm happy with this, right? So if this is our support, then cool, price has tapped this support, right? And what does price do when it taps supports? It fills ranges, right? So if you look at exactly where price closed in terms of the daily, I would say it closed below this most recent, right? So we were looking to mirror this, grab liquidity around 80, 86 sorts of areas to come down. And we didn't get quite that high. We came up to around 1880 sorts of areas, but we just continued to drive down. But now we're at the bottom of this daily range, and just understanding the fact that because you've kind of filled that range now, there's a high chance that prices it can start rejecting around here. And a rejection could mean either that it's gonna reverse in terms of market structure, that could be the beginning of a reversal, or it could be that it's grabbing liquidity to continue down, right? So in terms of our overall bias for the day, we're obviously quite bearish. I would say let's have a look at where it's pushing from, right? So it's just pushing very aggressively from these sorts of areas. So after it breaks through here, every time it does that, you have this area of interest. Last time I broke through those areas, we have this area of interest, I would say. And I'm looking mainly at like bearish momentum, right? So even this, I'm relatively interested in this because it's bearish, and it's kind of like we're looking at these sorts of ranges here, right? So potentially extend this over to here. You have some pretty aggressive moves around here. I'd say you push down from these sorts of areas, right? Around 1960 sorts of levels. Cool. So as we're respecting 1865 as our level, we could expect that today's candle could close bullish, respecting this level, and if it does, we'll be looking for liquidity to break those daily highs that's going to form today, and then come grab liquidity for more sells on the way down, right? So what are those kind of levels looking like? I'm interested in kind of these wicks here, right? I'm interested in let's have a look. Yeah, so even like these, right? So from this box, from the top of this box to around these areas are interesting, because after this closure, that's kind of like a fake out back into this range. You came up, you filled the range, grab liquidity to start coming down. So if you come up all the way to these sorts of areas, yeah, a sell would be quite nice. It might not happen for this next daily candle, because that's quite a lot to ask for, right? That's price pushing how many pips? That's price pushing around like 300, 400 pips, right? So we have to understand that this is a daily time frame, so smaller moves will happen, and we can capture that. But I'm just looking at this mainly. This is very interesting, right? If we were closing respecting, or in this overall range, let's say we get rid of this. If you're just in this range overall and you want to fill the range, is it possible that you'll just tap sort of these areas, 1875, before just kind of coming straight down? I'd like it to break the previous daily high, and tap sort of these areas, because even if price does this, right, taps here and you take a sell here, right, it's likely to do something like this. If not, you could potentially start rejecting to go up. If it goes up, it will tap again to go up, and that's just market structure. So it's likely you'll be able to exit at break even at this price point anyways. Yes, so I'm gonna keep one level from here. That's gonna be this. Actually, I'm gonna keep that one level, and then I'm gonna move on to the 4 hour. So the 4 hour, we wicked into these sorts of areas, right? 1857, 1855 sorts of areas, and we've now closed bullish, right? We haven't had a bullish closure for quite a while, since like 2 a.m. this morning, so about 21 hours. Just looking left to find my support, and it looks like our 4 hour has closed respecting here, right? So this 1863, right? So this could be, this is where I was mentioning just now on the daily, we could be mirroring traffic in this sort of area. So what is the top of the range here? I would say your top of the range is around here, right? And what's this based off of? I'm basing it off this, and also this potential fake out, right? And also this, right? You also do have a couple wicks tapping these sorts of areas. So that's my top of the range, right? That's top of the 4-hour range. So potentially, if price comes up to these sorts of ranges, and I would say even you could take potential sells at these areas at 1878, because if you do, that is the top of a smaller range that's potentially on the 1 hour, right? The 4 hour is still ranging around here. This, you could say this is your range 1, and you could say this is your range 2, right? So if that is the case, we could be, you know, ranging in range 1. We'll find some market structure here. We break up, and if we do, we potentially could get some sells. And this is what this done, right? This is a 4-hour candle, so this wick is a 5-minute range, right? There's a lot of range in there on the 5, on the 15, and the 30. So I would say in general, I'm looking for sells at around these sorts of areas. I'm going to move this slightly up to around here. And what does this look like? So always refer back to what that looks like in terms of price. Cool, right? Could be potential breaking of these highs, right? And I'll potentially also, we can definitely look for sells earlier depending on price action. If it starts breaking below like this, right, we could be getting in entries around 1872 instead, right? Because if you're breaking the structure, you're going to want to fill that range, right? So look at this. When price broke below, filled the range down to here, even though it's a smaller range, but this is a tradable range still. That's still like 80 pips. So if it fills the range, if it fills the range, cool, I might not get anything. Potential buys. But if it, you know, breaks below, I'll look for that top wick, tapping these sorts of areas, potentially even at like 67 to 72 sorts of areas. So yeah, let's drop down to the hourly, right? So we know what we're interested in and the kind of areas that we're interested in now. Hourly, I would say we can draw another support around here. You're kind of forming a range 1 and a range 2, right? You have had this fake out as well, this wick here. This could have been a fake out. This could have been a zucchinis to come back up and retest these highs at 1873. So we might get sells during Asian today. And you might get buys or sells at Asian today. So if it comes down, breaks these lows, you could get a buy to come back up if it's showing short-term bullish structure. But if it's breaking below and you get a top wick, it could be going down. So the area we're expecting 1861. Let's look at what it looks like in our area of interest, right? So this is the area we're interested in. So we could see that price also respected 1863. So the 1861 could have been a fake out to start printing that bullish structure to go back up. Understanding the fact that we tapped 1861 once and rejected, right? It came down to a similar sort of area around 1862 before pushing all the way up. And this is what we mean, right? So it's printing bullish structure, found support, and it's printing bullish again, right? Came down, broke all the lows for the last 3 hours, and then started pushing up, right? You had potential entries 2 times, right? You had potential entries, 3 times. These 2, and also this one here. So this entry, or this entry down here, would have been just the next time it tapped here after printing some structure, right? Because on the 5, on the 15, you'll see this being a range 1, range 2, grabbing liquidity back in range 1 to go back up. If you miss that, right, you could have potentially gotten some more buys here, and definitely here when price closed, the hourly closed extremely bullish, filling this wick, and I came back down to grab more liquidity before pushing up, right? So many opportunities, and we're expecting this to happen again. So if price does that, right, currently this hourly has no bottom wick, right? If this hourly closes the way it is, or potentially above, creates that bottom wick down to around 62 sorts of areas, 61, I'd like it to break these lows. Ideally, it doesn't have to break this low, because if it breaks this low, it's like just going to fill the range down to 55. But if it breaks these lows for like a steep wick and like a quick push, I'll look for a buy to go up. And what does this look like in terms of the 30? It's dropped down to 15, so it makes sense for you guys, right? So, so let's have a look here. So actually, let's go to the 5. What does this look like on the 5? I'm going to ignore this because this is a fake out, right? Fake out, come back into the range. Cool. You have a potential, I would say your range 1 is potentially here. You do have smaller ranges, right? You have another range which is here, and you have another range here. You have kind of like a 3rd range and a 4th range. But I would say generally, you could almost say that this is your range. Maybe not quite here. Let's have a look. This is okay. I'll probably take this. This is my range. this and this. So what does this look like on the 15? Let's just have a look. Does this align on the 15? Because I mean, I could be drawing these ranges wrong, right? So what makes the most sense in terms of my ranges? If it doesn't make sense, just that there's not enough confirmation for me to take my positions, right? What makes sense? I'm liking this, right? So you have one fake out there, you have kind of a range here, and then you have your next range here. So if you drop down to 5, what does this look like? Yeah, so these potentially could have been fake outs just to come back in. This kind of respected, so I could say, you know, it's kind of down here, and I'm happy with that. Happy with this being like a general, you know, range on the 5. So what does this mean, and how can we get buys when it's printing this sort of structure, right? So what's happening is we're still in bearish structure, right? Fake out, came back in, started ranging, right? Ranging around these sorts of areas, came down, grabbed that liquidity. Now we're like ranging slightly higher. But what is this? What does this show? We haven't really moved anywhere, right? We're still bearish. We had this fake out, so we've potentially found some support. Does that mean we're going to go up? We don't know. Does that mean we're going to go down? We don't know. But what we do know is that it's ranging, right? It's ranging in these areas. It's consolidating, so it needs liquidity to go anywhere, right? So if that's the case, we can be looking for ourselves slightly higher up, potentially tapping into the next range up. So anywhere, you know, within this box, which we haven't identified yet, and we can get our buys potentially because we're in another range above. We could be looking for buys in, I would say, these areas, right? So like anywhere between here and here. So aligned with our 1861, 1862 sorts of levels. That's what we could potentially be looking for. So if I'm just going to do some analysis on the 30, and then because the 30 looks the cleanest for me at the moment. And when that is the case, I will be looking for what happened. So this, I mean, it looks like a fake out, right? But let's see what happened the last time price was in this area. So, okay, cool. I'm going to be looking for something, a break of structure, for like a break of structure to come up above this area, right? This area here, yeah. I'm happy with this. It's a pretty strong level. So if we get a break of structure above 1868, right? So this will be a range 1, this will be a range 2. If we get a break of structure up to here, I'll look for a bottom wick at around these areas. And what happened last time? Price did that. Last time price did that. We're looking at these 3 wicks, right? So potentially we won't get in buys here, but we'll get in the buys here. So you have your closure above this range, a wick down, breaking the previous low. This is a perfect buy to start retesting the highs. All right, and I'm not saying that you need to hold to like 1880. You can if you really want, but it's likely we'll just take next range up, which is, you know, looks like around 1873 or around around 1873 levels, which gives you about 50 pips, man. That's pretty fucking good. So I'll be looking for buys here. No, so I won't put it there for now. Because these buys are depending on structure, right? So if that structure doesn't form, I will not have buys. Why? Because we've been extremely bearish for the past couple of days, and the past couple of days have just drove down, right, with no need for liquidity grabs. So if it does continue down, what's to say that this is not enough liquidity to go down, right? You're breaking above range, and you could be potentially faking out if this hourly flips, right? And this could just start driving down. So taking a buy when it could just continue to flip down is quite dangerous. But taking a sell, I can be very interested in. So let's look at sells. So last time price was in this kind of range. You know, you're respecting these sorts of levels at 860, 64. Where can we get sells? It's difficult to get sells as well, unless price prints some level of structure. It's difficult to use this as price point because there's no indication that price has grabbed liquidity in the last 3 days in the higher time frame. So I'm actually going to refer back to just market structure. So what is market structure? Look at this, right? So you've come down, you've ranged, At some point you broke the highs and you started coming down, right? Looking for something similar here. From here, come down, you faked out here, right? Ranged here, now you're ranging here. So if you do show that you're kind of bearish, I'll probably need some level of confirmation. I'll look for a top wick to come down. So either this will happen or I'll look for this. So if it comes up, ranges like this, ranges here, and then starts doing this, right? I'll potentially look for a top wick and then a flip. I won't take a sell in terms of a wick because just I'm conscious that we haven't grabbed liquidity. I think taking a wick entry for tomorrow is difficult. Well, at least for Asian, it is going to be difficult because if you take a wick entry, there's a high chance that it might not come back to where it will because, you know, we're very bearish. It could continue driving. If you're grabbing liquidity, it could be quite an aggressive liquidity grab, or it could be, you know, towards the end of the week, end of the month, it could be forming that bottom wick for that wick fill next month. So, you know, when candles are entering the last, you know, phase before it closes, it typically retraces a little bit. And if it retraces, I don't want to be in a position where I'm in a sell and it retraces, and it creates that steeper wick for wick fill next month, right? So in general, I would say wick entries are difficult for today. Let me get back to, yeah, I would say in terms of structure, wait for a little bit more structure to be printed. Like ideally, you can wait for something like this. Something like this, right? So if we look at this on the 15 or the 5, this is quite nice, right? Like you have a range 1, you have a range 2, and just this range 1, range 2 shows that, okay, you've been in this range for a while. Once you have a pretty like a steep push up, but then a closure, like before this steep push up, you had a rejection at this level, right? You closed bearish, rejecting off this level. Next one came and broke these highs. Could have potentially gotten buys here. I think we were looking for slightly higher up at around 80 to 82 levels, so we didn't tap. But this is what we're looking for, right? And then you start closing bearish here, closing bearish below this range, right? Come to grab more liquidity and then started to flip down. So that's what we're looking for here as well. So we need some ranges to print. We need it to fill the range potentially down to 61. Once it does that, we could be looking to mirror something like this, right? So if price does this, comes down, we're ranging, now we're ranging in range 2, and then we come back into range 1, range in range 2 again, right? But then we close respecting, and then it does this. Cool, I'll look for this, and this will literally just mirror something like this, and this is what price typically does a lot of times. So those will be my sells, and currently there's no level for it, I wouldn't say. It's difficult to put a level on it, just because the kind of traffic that we had previously is very different to what we have now. So let me just go back on the 30, right? So yeah, the traffic we have now compared to this, where it's kind of filling these massive ranges, right? We need it to break out of this, and well, this is the only buy I'd be potentially looking for in terms of liquidity if it respects. But if we're looking for sells, it needs to grab liquidity to come down. If not, we'll be looking for break of the current lows or like flips of certain candles to start driving further. But a wick sell is difficult unless we tap these sorts of areas, I would say. These sorts of areas, or potentially like 1875 I'm looking at. But then you're not going to be capturing, like you don't know if it's going to push completely down. You'd probably be okay to hold it down to around 70. But understanding the fact that if it does tap 70, it could just start rejecting again, right? So 70 is around here, right? So at these sorts of levels, it's just kind of rejected, right? You tapped it, but you rejected. I'm just trying to see if there's anything I've missed in terms of sells coming down. Yeah, you need some larger ranges to be filled. And currently, like if you look at the hourly, like look at this, there hasn't been any large ranges filled, right? You've only had like 4 candles close since that massive push, which are kind of respecting 1861. So generally I would say wait for market structure, and yeah, adapt to what the market is printing. Today is more about just understanding market structure, understanding what the motion is, and then seeing if it plays out on your time frame, and if it does, cool, you can attempt some sells and buys. Like, look at this, right? It's just the motion here. Come down, come up, come down, come up, come down. Cool, you know, you're still very bearish, you come up, right? At some point you respected here, right? You respected this, you're expecting a celery to come down potentially, but you went up, right? So this could have been a fake out, which it was, to come down to here, continued, and then you started ranging here. You ranged, you broke out of the range, right? So you come, grab liquidity, come down, one more liquidity grab, and push down. So it's the same motion that's going to get played, that's going to play out every day. But today I would say, yeah, there's not much I can do. I can't analyze this properly until we get more ranges formed. Yeah, I'm gonna start doing some questions now. I will actually mark up this for potential buys, depending on market structure though. These buys, I would say the range for the buys around here, right? So I'd like it to break these lows, but I'm also conscious that it might not. But I would need price to respect certain levels. Like it would have to do this, come up, and obviously it's ranged here, right? This is the hourly chart, so on the 5 it's ranged here, and it's ranged here. So if it does this, right, on the 5, and then it ranges like this, if it does this and it's respecting, right, and then comes down, grabs this liquidity, I look for that buy to come up. But yeah, until this happens, I can't take anything. And with this, like if this hourly closes bullish, not filling the entire range, but respecting kind of 1864 sorts of areas with no bottom wick, I might be looking for just a bottom wick on this candle to drive and retest 1868. So it would be potentially like a trade which would be like this. But that's the only way I can get anything at the moment. Sells are difficult until you print slightly more and you get top wicks like this, right? And buys, you can understand that you need to break lows to grab liquidity to go up. But yeah, let's get some questions now. Yeah, cool. I think you asked me this most recently as well. So how am I combining trading, work? So in terms of my life in general, I'm doing multiple things, right? Like trading is obviously not the only avenue for me. But I'm also understanding that trading is a skill that I want to build, because it's going to allow me to gain that financial freedom earlier, and it's something that I control completely. It's not like a job where it's like, oh, you know, you're doing certain work and you're getting paid a certain amount, and the promotion is like up to them, halfly up to them, and also like kind of partially up to you as well in terms of your performance. But trading is 100% down to you. So like I would say it's one of the few jobs out there that, or like roles almost, that you control completely. So your performance directly affects how much money you're going to make, and in the future, if you have the skill, it's not going to go away. So what I'm doing is I've currently got a full job. I'm doing trading. I'm also doing some like building journals on the side, helping out with DVS in general. I'm also doing my own startup. So there's multiple things going on, and in terms of time management, it's just number one, I think prioritizing what's most important to you is quite key, right? Like 9 to 5 for my job, sure. Is my job like the number one priority for me? Obviously I want to do good in my job, but in terms of the skill that I want the most at the moment, is that just my job? Not necessarily, right? So I'm putting quite a lot of emphasis in trading, which is why most of my time is spent analyzing charts, even like sometimes during lunch, during work, and I'm on the stream sometime like close to like around 5 p.m. sorts of times, and then throughout the entire like morning I'm looking at the charts and everything every 15 minutes. So it's just being like, you can trading isn't like a full-time thing during the day, so you can kind of manage 2 or 3 things at the same time, I would say. But I would say yeah, like doing both is definitely fine. It's just you need to find your own balance when it comes to how much time are you able to put into trading as a maximum, right? And then also understanding the fact that trading shouldn't take up like 24 hours of your day, right? You don't need to look at the charts every single minute. Like, sure, maybe during news and like after news, you want to get into a position when there's like extreme amounts of volume, then sure, be around for those like 5-10 minutes, right? And obviously when you're in a trade, you can look back every 5-minute closure, or every 15-minute closure, depending on what you're looking for. But you don't need to be on it every single minute and every single second of the day. And that's one thing that, like, because we see Don trading every day on the stream, and he's like analyzing charts, talking to people, and seeing the movement of the chart every day. And you're probably on the streams every day as well, and you're looking at that every single second of your day, 9 to 5 or whatever, right? But you don't need to do that. You just need to like scan the charts when it's close to your like areas of interest, right? Like for example, if I was trading by myself, oh, by the way, this hourly is gonna potentially flip. What's it looking like on the 5? Yeah, like, so, like, for example, if I was trading by myself, right, what would I do? I would potentially just like keep it pretty chill. Like, I'd probably have some alerts around 1861, probably have another alert around 1868, because I understand that this is a range I'm not trading, right? If I'm not trading this range, if it just goes up and down here, I don't give a shit, right? The one time it taps these sorts of areas, cool. Like, then I can at that point analyze what I'm doing. But obviously I don't want to be in a position where it taps the level and I have no clue what's going on. So I might be on the charts like every 15 minutes for like 10-15 seconds just to see what's happening, right? And that you should get into a mindset where that 10-15 seconds is enough for you to analyze what's happened most recently within the last 10-15 minutes, and kind of make a judgment based on that. Does that help? Yeah, bougie, like I need more structure, because with this structure currently, like if it's pushing up, it's going into this range here, sure, you could potentially get like buys around here if it's closing like really bullish here or even above, and then you get that bottom wick to come and tap. But like, what's to say this isn't just like a slow trickle up and then just coming down, right? Like, you just don't know. Yeah, like if you're doing this for the past year and you've been like on the charts every single day and you're trying to do a job on the side as well, like, understand that your job is like a full-time commitment, right? Potentially, depending on if your job is full-time or part-time. But trading doesn't have to be. Trading has that flexibility. You can also select days that you're trading. So for example, some days I'm in the office, right? I just can't trade at all. So cool, I'm just not going to trade, right? And like being okay with that and not having FOMO is very, very key. Because if you're looking at a trade being like that's playing out, that's your concept. One thing that's really, really good to kind of build in terms of a skill is just you're watching it play out and it's like, cool, wow, my concept played out. I didn't make any money today, but it's still a win, right? You looked at the charts, you saw that played out, you had your analysis for the day, it tapped the levels you were looking for, and it pushed for X amount of pips. That's exactly what you want to see, right? And like, even if you wanted to trade that day, you understand that because you're at work, you can get called off to do something else at any second. You could just miss your exit, right? You could miss your entry, you could miss your exit, you could just have no time to manage your trade, and it could end up in a loss. So always think about what your situation is in terms of time for that day, for those certain hours, and for the week, right? So for certain days that you can't trade, just don't trade. Yeah, I mean, I think it's different because you've been relying on full-time income from trading, and that puts pressure on you, right? It gives you no amount of time to develop a trading skill because you've jumped straight into it thinking that it's going to be a profitable industry for you. Sure, like you can make money, but you can lose money just as quickly, right? And I'm sure all of us here have lost quite a lot of money before we're starting to kind of learn the skill and become profitable. There's obviously like a select 1 or 2% of people who just come in and they're straight up profitable. But I would say I'm definitely not one of them. I'm still learning. And And like even on days like this, right, I don't have a clue what's going on. I need structure, and I'm happy with me saying that. Okay, cool. I need structure. I don't know what's going on. But yeah, I think having trading as your only source of income is definitely difficult, and I would try to modify that position so that in some way you're able to have some level of income that doesn't depend on purely trading, because trading is like you can make 2% a day, but you can also lose like 5% in a day depending on your risk. So just knowing the fact that, you know, if you're risking everything on trading, some months will be good, some months will be bad, and then you'll feel like your emotions, because you're depending on it, your emotions will fluctuate a lot as well. Yeah, Zay, exactly, right? Like you can lose a lot of money very quickly. Phobic. So what about copying somebody else's signals, right? Can we use their signals to analyze? So honestly, I would say signals is a great way to learn. Use the signals as it's basically like a book, right? You're reading somebody else's experience, right? But it's also live, so you get to train yourself in terms of emotions as well. I would take signals, but if you were taking signals, obviously, like for example, Don's signals or Yanez's signals, they're high percentage win rate signals, right? So you can risk a little bit more, but still within the kind of limits between, like, I would say 1 to 2%, right? But if you're trading yourself, always, if you're not fully profitable yet, I would suggest trading a 0.01 on a 0.01 on a $100 account and just making $1 per 10 pips, right? And you're still taking those trades, and you can make money on those trades on another account, but understand that those are not your trades if you don't understand them. Once you do start understanding them, and you can take ownership of like, oh, okay, I would have been in this trade as well, or you're looking for a setup and you're like, oh shit, this looks very good, I'd like to be in a trade here, and then you're on the stream as well and like, oh, he's looking for a trade here as well, then that's the kind of epiphany moment where suddenly your trade and his trade lines up. So then it's a joint ownership, and that's the next step. The third step is you have full ownership of that trade, right? So you're not relying on him anymore. That person, if it's Don, Wix, or Yanez, right, that person's trading doesn't influence you. You are taking your own setups, and you're not taking their setups sometimes. You're taking their setups and sometimes not taking your setups, because you understand that you might have not had enough time to analyze the markets, and you're using those signals as like an advantage, because obviously they're going to have more experience than you do at this stage. If not, why are you here, right? Don's probably one of those guys, but at the same time, he's also not somebody who came in and was profitable immediately, right? He constantly talks about how he blew 20 or 30 accounts before he was profitable. I blew I'd say 6-7 accounts, or the same account 6-7 times, and then multiple accounts as well before I'm even close to being profitable. Even now, because I'm only starting to test my profitability, I wouldn't say I'm fully profitable yet, but in terms of my analysis and my trading concepts, I would say I'm I have good amounts of confidence in my profitability. Let's have a look. Yeah, Tony, for you, it's all about psychology, right? Yeah, at some point in my trading as well, and I'm sure with everybody's trading, you're in a win, and you're like, oh shit, this is so good. I love trading. Then you're in a loss, and then or potentially you're in profit at the moment, and you're like, oh, wow, yeah, trading is for me. Look at this, I can just make $300 in 10 seconds, right? But then it flips, and then you're in drawdown. You're like, fuck, why am I trading, right? Shit, I could lose all this money. I can't afford to lose $300. What's that likely to be? Either you're over risking, right, or you're trading with a lot of emotion, and you need to. I would say also, because if you're over risking, you will have more emotion in the trade because you need it to win. If not, you've lost your account, right? So don't put yourself in that kind of situation. But yeah, I 100% agree, and I think for most people as well, it's very much purely psychology based. When would I consider going full time, or is that something I would consider at all? Yeah, for sure. I think I would definitely. I am still looking to go full time eventually, but I need to prove to myself, right? I need to prove to myself through data and evidence that I am profitable, right? So my stages, and I think the stages for anybody to go through, the ideal stages are phase 1, you're going to lose money. And there's no chance of you like losing. You can lose less money, but you will lose money. And it's usually an amount that you're not willing to lose, which is why you're going to go through emotions, right? And then you have this whole second phase, which is cool. You have to understand why you're losing, potentially find a mentor, find a strategy, and that's your phase 2. Phase 3 is when I would suggest you open that $100 account, trade 0.01 pips, potentially get signals as well, and you could potentially raise that up to like 0.05 lots or whatever, right? 0.01 for your own trades, 0.05 for other trades, just to get a feel of like different types of lot sizes, and those different lot sizes will have different effects on your emotion as well, right? Because you're at that point in phase 3, you are still struggling with emotions, right? So that's what I would say is phase 3, and then it's a loop between phase 3 and phase 4. I would say phase 4 is when you test your profitability. Phase 3 is kind of like an accumulation phase where you're learning and you're educating yourself. And you get to phase 4 when you're like, okay, I think there's a chance I'm profitable now, right? In that case, I'll go and I'll open a 100K account, or I'll open a 10K account, 5K account, or whatever, and then trade that normally with 1 to 2% risk per trade, right? And once you do that, obviously you'll have to initially adapt to the kind of the numbers flowing like much quicker than your 0.01 trades, because 10 pips for a 0.01 lot is $1, right? But 10 pips on a 1 lot is $100, right? So it's going to fly a lot quicker, and it's going to take time for you to accustom to that. So if you're not profitable yet, and you'll figure this out through phase 4 testing, so I would open up like a 5K. If you pass it, cool. There's a high chance you're profitable, right? But it's only profitable if you didn't over risk, and you followed your 1 to 2% plan and slowly built up that account until you pass both phases of the funded, right? If you just blew through it and you just kind of fully funded in like 4 hours or whatever, then you don't know if you're profitable. So phase 4 is not about, oh cool, just passing phase 1 and phase 2 of the funded. Phase 4 is more about understanding that, cool, I am a profitable trader in terms of my concepts, right? And I can make money. And once you get there, that's a very good place to be in. Phase 5 is, I would say, when you've traded multiple funded accounts, and then you've kind of extracted that money to get that money into your own accounts, and then you're trading your own live account. I would say is phase 5. So obviously Don is phase 5, right? He didn't need to do all that funded stuff because he had 5 years worth of experience trading, and he learns quickly, and he's good in terms of the market structure and everything. A lot of people will be struggling in phase 2, which is emotions. A lot of people will also be confused what to do after phase 2, like how do I test if I'm profitable? So I would go through that phase 3, phase 4 loop. You accumulate education constantly, right? And at certain points, if you feel confident enough, go to phase 4. If that doesn't work out, come back, right? Then your total loss for that, if you're in like a 5K account or funded, it's like $50. So it's not that bad, right? You can probably make $50 back depending on your situation. But going between phase 3, phase 4, going back to phase 3, and kind of bouncing around until you're in phase 4 and you feel confident, and then go to phase 5. That's the overall progression that I would see. Yes, gold hourly flipped, right? So based on this, what does this look like? Let's just analyze this really quickly, right? So for example, I've come back after 15 minutes of not doing nothing. Just see this, right? No top wick here, you're flipping, it's likely going to fill the range, right? Am I going to take a buy here right now? No, because I'm understanding that if this is a fake out, price could have done this, right? Ranged, fake out, drive, right? This is liquidity to come down. So price could just be continuing that structure to rip down, right? Rip down 1855. Where is it in the next tap? Yeah, like if it's breaking that structure, if it breaks past 61, we could potentially get some sells around these areas, right? But until that happens, or like these areas or these areas, you're looking at these wicks, right? So anywhere like this could be your first position at around, I would say 65. Pineapples maybe at around 69. A third pineapples maybe at 72. But yeah. But currently, look at this. There's no reason for price to come up, right? It's just bearish. The structure's been bearish for so long. You haven't filled the range, potentially you won't, right? It's likely it will in terms of like grabbing liquidity. So if it closes bearish below here or bearish below here, I'll need a bottom wick, right? So if this creates a bottom wick after 10 minutes and it comes up, breaks these highs more importantly, around these sorts of areas, around 68, I might get some sells. But again, I'm not trading Asian sessions, so be careful and just listen to Wicks and kind of understand his education and advice, yeah? Tony here in phase one, man, there's so many people in phase one. I would say the majority of traders are in phase one because it's so difficult to get to analyze what you're doing wrong, because trading is a personal game. Like, you have to be very self-aware of what your flaws are as a trader, and that is very difficult. Like, it's so easy to just go into the markets every day and be like, yeah, cool, this looks like a setup, cool, I'll take a buy or I'll take a sell, right? And you lose money, you're just like, ah, fuck, I guess that didn't work out. Why? You don't know, because you might have only started trading. Or another thing is journaling, right? You're not journaling, so you don't understand what this trade means, which is why journal is so important. If you've taken the same trade over and over again, a journal will tell you if that trade is profitable. Whereas if you're just doing it yourself, there's no evidence that this trading style is profitable or not. Yeah, Bougie, next hourly and 4 hour closure is going to be, I think it's 2 more hourlies until 4 hour closure, right? But where do we want the 4 hour to close? Ideally, I'd like the 4 hour to close bearish. If it closes bullish, I would need a bottom wick very, very steep. Like these sorts of areas, which is like, oh, that's a lot of pips away, man. Like, if it closes bullish, that's going to be like 60 something pips away, which I don't think will happen in Asian. But if it closes bearish like this, right, with the bottom wick, I'm going to expect it to fill at least down to 61, right? So I'll look for top wicks around these areas to come down, and that'd be quite nice. Yeah, cheers, Jen. Yeah, just I don't have a stream tomorrow, but just like, I'm on basically every single day, and I will be on for the next, like, I don't know, foreseeable future, right? Like, just streams every single day. So just hop on if you have any questions. Just, yeah, send them on. I'll forget questions if you send it to me on like Discord. So just copy and paste them and bring them here. Yeah, no worries, man. What's your recommended leverage? So I know Blueberry does leverage, which is 1 to 500. Leverage doesn't really matter as long as you're like, you understand that your risk is 1 to 2% per trade concept. That's good. If you're over leveraging, right, and you're over risking, that's the main issue. The actual amount of leverage, I wouldn't say is as key as you would think. Like a 1 to 100 compared to a 1 to 500 doesn't feel any different, from my experience at least. Like, I'm trading a 1 to 100 right now. That's just because that's what my funded gives me, but it's completely fine. Like, it feels completely fine. So yeah, journal your trades, guys. I mean, I showed Don my trade as well, but like the new journal that we've built is something that will help you. Like, it puts a lot of ownership into your own trading, so it will help you go from phase 1 all the way to phase 3 and 4, and eventually to phase 5. Like, a journal will stick with you all the way till phase 5, right? Because once you're profitable, you'll continue to do that, and potentially you'll do what Don is doing. You'll potentially do signals, you'll potentially do a bunch of other stuff for it. So I'll show you the journal, right? Like, you're asking in terms of a psychology tab. It's exactly this. I built a psychology tab for this. Like, these are some key things that you need to keep in mind when you're trading. right? Number one, journaling is difficult, right? You have to have a full understanding of your trades, right? If you're just trading and you don't understand what your trade is, you can't journal it properly. So journaling properly is difficult, right? And also, like, secondly, right, you know, trading isn't, like, journaling isn't something that, like, you need to force yourself to do, because if you force yourself to do it, the quality of the journaling is not going to be very high. You want to do it. Like, if you want to do the journaling, it means that you want to improve, and in that kind of mindset, journaling is much better. And then you have to kind of understand, like, how do you feel now that journaling is very different? Because, like, with these journals, right, there's so many elements to it, but because there's so many elements to it, right, we can look at this, like, we can look at, okay, cool, I've taken a total of 81 trades on all sessions for this month, right, within 2023. Like, this is what, like, this is telling me my overall win rate for this is currently 71%, right? If we look at just New York, it's 71. It's 65 on New York. I've taken 71 trades. London, haven't taken anything during London. Asian, I've taken, and I've got a 5% win rate, right? So it's just stuff like that. Like, you need to understand when you're trading, and the other, and over time, this will be built up. Why is my Asian so low? What the fuck? Did I lose all these? I have a lot of break evens, that's why. Yeah. What are these ones? Some break evens. Yeah. Yeah, I don't really trade Asian, mainly because, like, I need sleep, guys. I can't trade Asian and everything. Seems like I need to fix this. This is wrong in terms of its formula. But yeah, so you can't get this journaled yet, because this is something I've built, right? So this journal is going through many phases of testing before I'm able to share it on. But use Don's trading journal, which is, I don't know what it is, but yeah, you can find it in his Discord. So if you join his Discord, you'll find that. How long have I been trading? I've been trading since March. Not very long, right? I've been trading since March, and I would say I started properly trading in March. Like, I dabbled in some other trading concepts and other, like, strategies from, like, I would say mid-February or, like, January, but that wasn't, like, proper trading. I started properly in March. I found Don, and then by, like, May, I was like, okay, this is not my kind of path to profitability. So took a step back, and this is kind of the phase 1, phase 2, phase 3, phase 4, phase 5 that we just talked about, going through those phases in terms of emotions and everything else, right? Yeah, I would say I'm not profitable yet. I need to prove myself in terms of profitability. So yeah, but, like, today, which was during New York, Don had no trades, right? But I had 6 trades, right? So it's just, if you have your own concepts, you'll take your own concepts. And all my 6 trades today, I had 5 wins and 1 break even, right? And I use 1 lots on 100k, which gives me enough for 5 positions for my total daily drawdown max. So that's the kind of under leveraging that I'm doing, right? And I'm currently up 2%, 2.2% or something for my funded, and I'm just taking it slow. Like, there's no need to take it quick. Like, this month for me has been a 2% gain on my 100k. Is there anything wrong with that? I'm still up 2%, right? The banks give me 4% a year. I'm 2% up. If I do this every single month, that's 24% for the year. Right, that's incredible. I'm doing 6 times the amount of 6 times the amount that the bankers are doing. So yeah, just understanding that trading is difficult, and you need journals, to be honest. I think most people need journals to succeed. Yeah, like, I think because having a job is an advantage, right? Because I don't need to rely on just trading to get me the money. But yeah, cool, guys. I'm probably gonna call the stream here. It's getting late. The stream's been running for about an hour here, and I think most people are gonna jump off to Wix's stream as well. So have a good time trading Wix's stream. Stay safe. And yeah, Bougie, it's just gonna happen in time. Like, and we'll just prove our profitability through that overall journey. So yeah, cool. Thanks for tuning in, guys. I think we peaked at like 30 people today. Jesus. Yeah, thanks for joining. And we'll see you. There's no stream tomorrow, obviously, so we'll see you on Sunday night potentially, or maybe Monday night. I'll see if I'm streaming on Sunday, but it's likely going to be Monday. So I might start doing 4 days of streaming a week. But yeah, I'll let you guys know in the Discord channel. And if you don't see it live for Sunday night, then it's probably not happening. Yeah, cool. Thanks, guys. Speak to you guys next week.